So the Wall Street Journal wrote a piece about Palantir, not the most positive piece about the company, and I was quoted in it. The writer reached out. I said, sure, why not? Asked a couple of questions. I answered in full. And yes, I know, I should have seen it coming. Because what happened, basically cherry picking my answers to fit the optics of that article. And the optics of that article is that, well, the stock has gone up extremely fast. The business itself is not doing that great. Government's not doing that great. So it doesn't make any sense. We'll go over the article and then at the end, I'll show you my full answer. So this is the title of the article. By the way, you're all welcome. You're now getting access to Wall Street Journal articles for free. Palantir's momentum hurt by slowing growth in government deals. Individual investors had bolstered company share price in their enthusiasm for new AI data platform. So I'm not going to go over everything, but if you want, you can pause the screen and see I'll scroll down pretty slowly. So first up, we start here with the fact that there's the government side, there's the commercial side, there's the fact that, well, most of their revenue comes from the United States. We know that. So they say here, meanwhile, the company's push to expand its business with overseas government and commercial clients hasn't completely offset this slowdown. We know the company's growth has slowed down from the promised 25-30% growth, 60% growth to what we've seen, but we know that 2024 growth should reaccelerate, which is part of my answer. So Palantir's total revenue is estimated to have grown about 16% in 2023, according to analysts surveyed by FactSet. That would be its slowest annual growth as a public company, hampered by cooling government growth. Okay. Government agencies are changing the way in which they work with Palantir. They don't want to put all their eggs in one basket because Palantir is expensive. Well, as Alex Karp has said in the past, if you want the best solution, you better pay up. Also, they offer something called Fed Start. If they don't want to put all their eggs in one basket, which by the way they've been doing for a long time, right? Lockheed Martin, L3 Harris, Raytheon. I mean, those are names that have been getting contracts year in, year out for decades now. But okay, I guess you'll have to lobby a bit better. Continuing here, Palantir CEO Alex Karp told the Wall Street Journal that the US government is a cyclical and difficult business that doesn't generate revenue in the same steady manner of a commercial business. Of course, we know that. In Davos, he said, you can't just look at an isolated snapshot and say that the US government is down, which is in the defense here. Chief Revenue Officer Ryan Taylor told analysts in August that Palantir's US government business was disappointing, but that the numbers belie the long-term strength of our business. In November, he said Palantir's US government business would pick up pace beyond its current growth of 10%. The US Army, a top Palantir customer, is using more tech companies for each project to avoid becoming too reliant on any single company or technology and to encourage competition to keep prices lower. Funny, because for years, if not decades, that has not been the case. The case has been that we're going always with the big giants, not with the smaller ones, which is why Palantir came in and created something that's called Fed Start in order to be able to take those small companies, these startups, and give them exposure with the, of course, needed security, accreditation, etc., give them all of that and become available for defense contracts. Okay. We want to make sure we can get the most participation from industry and the most diversity. The Army also wants more control over its own data than its software vendors have given. Again, the notion of Palantir controls the customer's data, etc., is just false. My contention is that all data is generated by the Army is Army data, adding that this might cause some discomfort and consternation at the technology companies that sell to the Army. He didn't specifically mention Palantir. Now, the company has said that its customers have control and ownership over their data and that it doesn't transfer, sell, or otherwise attempt to profit from customer data. We've heard this before already. For example, the NHS in the UK, don't sell your data to the CIA, Peter Thiel-backed American company. Again, uninformed people with dumb conclusions. Let's continue here. Again, for those that have followed the company in these videos, you know what we're talking about here. So Brent Thiel at Jefferies, an analyst there, cautioned recently that Palantir stock had been hyped by euphoria regarding artificial intelligence and that its government business is decelerating without assurances of when it will recover. Then we've got the analyst at William Blair. He flagged last year that Palantir would suffer from increased competitive pressures for new defense contracts. By the way, I hope we're all on the same page here. We didn't invest in Palantir solely because of the government side of the business. No, the government side of the business gives us a good, let's say, way of staying stable-ish, but we are definitely investing in Palantir because of the commercial side of things. I hope we're all on the same page here. Would be great if the government reaccelerated. Of course, don't get me wrong. Let's continue. How can growth reaccelerate across the board? Well, of course, AIP. Palantir itself said that should fuel the company's growth. It is going to be nearly the complete value of our business. Then they talk here a bit about the clients and how US is a bit easier than the European ones, especially for commercial and governments as well. Palantir executives have cautioned investors that the company has had challenges selling to other European governments, which had similar data privacy concerns, NHS, stuff like that. Carp said more recently that it was in Axios. Basically, if they made their products available in Germany, it would be the best product there, and they have actually 5. Again, confidence, confidence, confidence. Now, a lot of us want to see continued execution. Then talk about the multiple partnerships and contracts that they've signed: ExxonMobil, Tyson Foods, Airbus, Skywise. We've talked about that. Its commercial revenue has roughly doubled in the past 3 years and now makes up around 45% of its overall sales. Then they talk here about individual investors who own more than half the shares had bolsters Palantir's price in their enthusiasm for its new AI data platform, which is unveiled last spring. And then here comes my part. So me, the individual investor in Belgium with a large social media following, said he hasn't bought any new Palantir shares in the last 3 months. Palantir hasn't really moved that much. He's looking for evidence the company can accelerate its sales growth with government and commercial customers. With the US presidential election this year, he said, there might not be the robust government contract as politics hinders spending objectives. Pure facts. Investors are still waiting to see confirmation of reacceleration of revenue. This is just a small part of what I said. We'll read in just a second. Last thing here, the army doesn't want to be locked into a marriage forever with Palantir. Again, they've been locked in a marriage with plenty of big companies for years and years. Yet, it seems that they paint the picture that Palantir is an issue here. I think this is BS. Anyways, let's look at my full answer. So, I've been quoted in the article. This is my full answer. 1. I am currently a Palantir shareholder and I have not bought any shares in the past 3 months. Despite the stock being down 20% since November, it is important to know that Palantir stock has rallied over 150% in 2023. While a 20% drop in share price might sound dramatic, I don't see it that way. Didn't want to include that, okay? Investors are still waiting to see confirmation of reacceleration of revenue, especially with the numerous AIP bootcamps, which made client acquisition 12 times faster, the company has been conducting in the past several months. Also, didn't talk about that. The sentiment right now is that growth had bottomed in 2023 and analysts are expecting it to rebound in 2024. The risks are that the company is not, she asked about the risks, by the way. So I answered, the risks are that the company is not showing signs of accelerating sales growth, both government and the commercial side, and growing earnings. So to conclude, 2024 to me is the year of accelerating growth. Of course, with this being an election year, a year of conflict, the government side of things might be a drag, but I'd like to see positive momentum with regards to Fed Start. Fed Start significantly reduces the time and cost for independent software vendors, ISVs, to get their SaaS products authorized for government use. This would have painted a completely different picture, in my opinion, in that article. But of course, when you write an article, you write that article with a certain view. The view here was a struggling company with a soaring stock price. And so the rest of my answer was not that good for that article. Fine, I guess that's the name of the game. I'm learning as I go. Now I know for next time. But that didn't stop the stock price to go up 4 to 5% the same day. Anyways, that will be it for this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.